Following program is sponsored by Adams Financial Concepts. Welcome to About Money, a different approach to investing you won't hear anywhere else. Your host, Mike Adams, is a registered investment advisor and works with investment portfolios exceeding over $100,000 in net worth and has a proven track record of managing long-term investments, surpassing the markets in the long term. The information shared on the following program is for educational purposes only, and any investment advice given may not be suitable for all investors. And now, here's Mike.
And we're going to be talking about money today, as we do each Saturday afternoon. So once again, I want to remind you that the Money Show is coming to Seattle June 15th and 16th. And the Money Show is also in Orlando. They expect 4,500 guests. I will be doing 2 workshops in Orlando. And you can find me. You can actually watch the webinar from the second show. They're going to stream it live from the second workshop. It's going to be on February the 9th at around 3 o'clock. You can Google the Money Show Orlando. Go through there and check the agenda. And on the agenda on February the 9th, late in the afternoon, I think it's the last workshop of the day, you'll find the one where you can actually watch me give my presentation. Now, I'm going to give one before that morning. I also have a workshop that morning. That one is not going to be streamed live. They're going to stream somebody else. For some reason, they thought someone else came before me. But anyway, I will be there in the afternoon. It's probably a better time because it'll probably be around noon on the 9th, on Saturday. So you can listen to a repeat of this program at that time, or you can hear me and see me live in Orlando. So that's coming up, Money Show in Orlando. The Money Show in Seattle, I will be doing 2 workshops. I will also be doing a regular presentation talking about how does this secular bull market end. I'll be doing 2 workshops on the profit sharing account that we do. And I will be doing in the exhibit hall on Saturday afternoon, I'll be doing some sort of presentation. I don't know exactly what I'm going to be doing yet. That's yet to be determined. But that's going to be live in the exhibit hall, and I think that's like a 45-minute presentation or 20-minute or whatever it is. I can't remember off the top of my head. I will be there. The Money Show will be here. You'll have some people like Steve Forbes, Larry Kudlow, Ralph Akamora, Edward Yardini, who I think is one of the best economists in the country, Bruce Johnstone, who's the head of Fidelity, Louis Navalier, and Mike Adams. All of us will be presenting. It's free, no cost. They expect to have about 2,000 people there. It will be at the Grand Hyatt in Seattle. They've been doing this for several years, and around the country, it draws up to 5,000 people. San Francisco, Las Vegas, Dallas, Toronto. They do a Traders Expo in Chicago, which is of no interest at all. Actually, they get a lot of people to the traders, but I just don't believe very much in the trading. You know that. I like to make money. It's not about action. It's about making money. So that's going to be coming up June 15th, 16th. Put it on your calendar. Mark it down now. It doesn't cost anything to attend. And you can come hear me live. So I want to shift. Something very, very significant happened just a week or so ago when the British Parliament voted down the deal that Theresa May made for Brexit. Big deal. It's going to have an impact worldwide on what's going on. I want to take you back. I want to talk about the background. How did they get to this place? And where are they now? And what's going to happen? So, if you talk about the British Empire, there was a time in which people said the sun never set on the British Empire. Canada, Australia, India, Hong Kong, plus, all of that belonged to the British Empire. The British Empire was the number one empire, the number one country in the world at that time. And it wasn't that long ago. So people that have grown up, people that are in their 60s and 70s, remember those times when the sun never set on the British Empire. But even with the rise of America, Britain was still a very, very influential country. Second largest economy in the world up until a few years ago. They had a significant impact on the world stage. That's the background in which most of the people grew up. Most of the older people, the younger people, something a little bit different. But times changed. China became the second largest economy, or is the second largest economy. Actually, Japan had become the second, and they've now fallen to third. Germany passed the UK and becoming the fourth, and France is approaching what the UK was. So suddenly, you had a country who had, for 150 years, an incredible influence on the world, where they were the financial center of the world before it passed to New York. They were the center of the financial world. They were the center of an empire. But that influence began to wane. So put yourself in their shoes a little bit. Put yourself maybe a few years into the future, and this is a hypothetical situation, but suppose China becomes the number one economy in the world. And the Chinese currency, the yuan, replaces the dollar as the currency of transactions. And the Chinese Belt and Road Initiative has many, many nations pledging their support to China and away from the U.S. And in response, the United States enters into an agreement with all the North American countries to form a North American market. It's the United States, it's Canada, Mexico, Honduras, Costa Rica, Belize, Guatemala, Panama, and El Salvador. We make this union coming together so that we have more clout in the world than just the United States alone. And these 10 nations decide that the center should be in Mexico City. The North American market should be centered in Mexico City. And each country gets to send a number of delegates, and the United States, being the most populous, gets to send the most, but we're in a significant minority. All these other countries have a significant number of people that go there. And it's a common market. There's no tariffs. There's no border. People have freedom to move to the United States. The people from Guatemala or Nicaragua can come flooding into the United States. There's no boundaries at all. And the rules that are made, trade rules and so on, are set in Mexico City. You know, at that time, even as we sit and talk about the things going on in America, we have to adhere to the North American market. So small companies are not competing just against U.S. companies. They're competing against Mexican companies and Costa Rican companies and El Salvadorian companies. And there's a wage differential, and you have people moving back and forth as well. So if you visualize that, you can begin to visualize what the Brits were feeling. They had given up a lot of their freedom and choice to Brussels. Brussels is where the rules were made. And their impact, they had to follow the rules being set in Brussels, not necessarily in the UK. And when you look at immigration became a problem in Britain as well as it was in the United States. From 1993 to the current day, there's been an immigration into the UK. From 93 to 2014, there were 3.8 to 5.3 million immigrants coming into the UK. They were coming in from Eastern Europe. They were coming, and it was long before the Syrian thing. They were coming in from Greece. They were coming in from Poland. They were coming in from all these countries. And they were flooding into Britain. Britain, for a long time, has had immigration from Rome, from the Germans in 400 AC. The Norman Conquest happened there. But from the 1800s until the 1980s, there was actually a net emigration of the Brits. It was the British Empire. You had the British going to America. You had the British going to Canada. You had them going to Australia. There was an emigration. But beginning in the 1980s, you started to have an immigration, not an immigration. And there was an accusation that they were taking jobs away from the citizens of the UK. Actually, the jobs that were lost were due more to the Great Recession than immigrants. But there was this feeling the immigrants were pouring in, and the Great Recession not only was affecting Britain, it was affecting Poland, it was affecting Greece. You remember Greece was defaulting on their debt. Italy had high unemployment. Spain had high unemployment. People were flooding in. That's the background when they voted for Brexit. So that's where they stood. They voted, and by a small majority, they decided to leave the common market. The UK government, in a period of austerity, a lot of the austerity fixed by Brussels, not by London. We're going to come back and talk about this because now we're going to bring it up to date and what has gone on now that they have decided to leave the common market and yet voted down the deal that was made.
More about money coming up with Mike Adams on AM 1590, The Answer. For more information, click on adamsfinancialconcepts.com. About Money continues. Remember the website, adamsfinancialconcepts.com. Here's Mike.
So I've been talking about Brexit, talking about what led up to the vote, and since the vote to leave, the Brexit vote, not the vote that currently happened in Parliament. We're going to get to that. We're going to get to that. Don't worry. We'll get to there, and we'll get to the impact of that as well. So what's happening between 2016, from the time that they voted to leave and to the current time, is further emphasis on the reason that they wanted to leave. Local wages were stagnating before the vote. They continued to stagnate. The number of bankruptcies in the UK actually surpassed what they were in 2009. Large numbers of immigrants, and the local people especially were blaming the immigrants for a lot of the problems. They were blaming the problems on the immigrants for taking jobs, for low wages, probably misplaced emphasis, because the austerity that Brussels had instituted, that had a bigger impact than the immigration. But it was easy to misplace the blame. And so the UK voted to leave the European Union. They instituted what's called Article 50, and that gave the UK 2 years to move out. That's effective March 29th of this year. So the way that they went about it is you have Theresa May, who is the Premier of the UK, and she spent a couple of years actually negotiating how to leave. Now, if you listen to sports radio at all, you get a picture of what this is like. Sports radio looks at the Mariners and say, oh, we just need to go out and sign a couple top-line pitchers. We just need to go out and sign a couple top-line hitters. It's easy on sports radio. The pitchers have a choice in whether or not they come to Seattle. They have a choice in whether they want the deal that Seattle would offer. There were times when there's a lot of players who could have come to Seattle that did not even want to speak to Seattle. They had no interest, absolutely none. So here it is. You have a negotiation going on. It's not just what Britain wanted. Theresa May is negotiating, and she has less leverage than do the European Union people. It's Britain that wants to leave. And for all the negotiations that were going on, France never wanted Britain to be part of the common market in the first place. France has to be pretty happy they're going. Not only that, it was just a few days ago that France and Germany signed a pact together. Now that Britain is out of the way, the two strongest economies in the common market has signed a pact on how they're going to work more closely. So you have Theresa May trying to negotiate, and over a period of 2 years, negotiate a deal. And usually, when you're negotiating, usually no deal is better than a bad deal. In this case, a bad deal is better than no deal because the impact of what it's going to be. So you got to ask the questions about Theresa May and how she went about this, because she negotiated this with her administrative staff, did not involve the MPs. MPs are members of Parliament. So there you have the whole Parliament. You can make an analogy as if the President of the United States negotiates a deal that has to be approved by Congress, but never talks to Congress. He just negotiates, or she, if we had a female president, they negotiate a deal, put it together. It's got a lot of problems with the deal. It wasn't at all. It wasn't the pitcher that we really wanted. It wasn't the hitter that we really wanted. They bring this back to the Parliament, and what happens? Parliament votes it down 400 against. It's a disaster. The Economist calls it the mother of all messes. It's a real mess because now March 29th is the deadline, and you have no deal from the UK side. You got to go back and ask France and Germany and the rest of the common market, can we take more time on this and negotiate? And, our Parliament didn't really like the deal, so can we negotiate something different? I mean, think about it. Brussels took a couple years to negotiate this and hammer this out. Now they're going to be asked for more time, and the UK will probably get more time. And there's not going to be a whole lot different that's going to take place. Probably not at all. So what's going to happen is this. With no deal whatsoever, what happens is the UK is going to be playing with their own set of rules and the common market with a different set of rules. So the UK is going to be the smallest member. They're going to have the problem with the set of rules the United States has when they trade with us, the set of rules that the common market has when they deal with the common market. 46%, between 44 and 46% of all of UK's exports go to the common market. No longer do they go free and easy. The common market now has a preference for French-produced things, German-produced things. Things that are produced in Poland get priority over things that are produced in the UK. Think about that. And you have to play by their rules. Duties. Products going from Britain into the common market are probably going to face some duties and tariffs as well. Same thing about shipping into the U.S. The UK suddenly has no trade deals whatsoever with the European Union or with America. And what that means is they're at a disadvantage all the way around. It makes it a very difficult situation. In their case, no deal is much worse than a bad deal. Will this all come about? Will the Parliament eventually approve the deal that Theresa May made? I think it's a probability that they'll finally come around, and with a few tweaks, to the deal that won't mean very much, they'll begin to realize what this deal means. The people that are going to be hurt the worst are the very people that voted yes to leave. I mean, in the Northeast, 62% of what's produced in the Northeast is exported into the common market. They're the ones that are going to see the impact. We saw what happened when we put tariffs on China. We've looked at the farmers who were growing soybeans. You know what? Just because we may have a deal with China does not mean that China's going to turn around and buy those soybeans again. There's other countries that want to supply the soybeans to China, and they've already made inroads to that. And for China, they're going to want to cultivate those relationships. They want to build relationships with other countries besides the U.S. And yeah, they may make a deal to buy more agricultural products, but it's going to be very different than what they're doing today. That's the case where it is with the UK. But this whole thing involving Brexit, involving the protectionism, there's a changing thing going on in the world, and it's going to affect investments. It's going to have a significant impact. And we're going to come back and talk about that right after my guest. We're going to be talking to her. So I want to welcome to the program Anna Boynton of Message Glue. Welcome to the program, Anna.
Thank you, Mike. Thank you. I feel like I'm having an awesome history lesson. It's fantastic.
Well, history is really important in this whole thing.
Great.
And understanding. And in order to look forward, you have to know what's gone on in the past.
Yeah. Yep, absolutely. True with most things.
Yes. So, Anna, why don't we start with your background?
Okay. Well, my background is theater. To sum it up in a word, I'm one of those kids that grew up in a theater family. My dad was a professor and my mom was a professional actress, and I was not born in a trunk, as they say, but I was certainly raised in the theater. So that's where I come from, and that's where I kind of base most of what I do now from, is teaching. I've taken all my professional theater training and my professional career, and I've parlayed it into using that skill set to help people, all people, people in business primarily, speak more effectively and with maybe less dread.
Aha.
Yeah.
Okay.
Yeah.
So you are part of a two-person team
Yes.
at Message Glue.
Correct.
Tell us about Message Glue.
Well, Message Glue is our company. My husband and I own Message Glue, and we the easiest way to describe what we do is we translate what it means to do storytelling. That's a buzzword in business community now, as far as, presentations and being able to communicate your ideas to any number of audiences. And my husband is the story part and I'm the telling part. So he's the one that will, he'll help you craft and really hone a message, and then I can help you deliver it.
Okay.
Yeah, in a nutshell.
So tell us about the story part of it. Let's begin there.
Okay.
And then we'll come to the tell.
Okay. The story part is really whatever you need to share, whether it's the content surrounding a new rollout for your company, or it's content surrounding the state of your business, or the content that means, what you need to tell your employees and how you need to share that with them.
Okay. And we're going to come back to that.
All right.
Right after commercial break.
Good.
So don't go away.
I'm not going anywhere.
Okay. But listeners, don't go anywhere. We've got a lot more to get to. And we will be right back after this commercial break. Want to hear what Message Glue has to say? And they did prepare my presentation. So we'll talk about that some too.
More about money coming up with Mike Adams on AM 1590, The Answer. For more information, click on adamsfinancialconcepts.com. About Money continues. Remember the website, adamsfinancialconcepts.com. Here's Mike.
Okay, so I'm here with Anna Boynton of Message Glue. We just started to fill in the background about storytelling, about delivering a message through stories.
Great.
So let's go a little bit there. We'll get to the telling part because That's your part.
That's my part. Well, the storytelling, so I think I was starting to explain where we start from. It's whatever your message is, whatever you need to communicate. There's a story in it. I worked with a woman who was more of a scientist and didn't see that there was any story in her content. Well, there's always a story in your content. You have to explain something to somebody in order for them to hear it and understand what you have to share. You can't just start in the middle and hope people get it. So the story end of things for us is really taking and culling through your conversation. What is it that you need to impart? And then finding the story and the story structure so that it will land with the most effective, that would be the most effective for your audience. And it will move the audience in the way that you want them to, whether it's change or understanding or excitement. It all has to get presented in a way that they will receive your information in the most effective way. So that's that.
So I can share the story of how we did the presentation, because I will be doing a presentation in Orlando. It'll actually be the same presentation essentially that I do in Seattle. Mm-hmm. It'll be updated in Seattle, but in Orlando, it was a story I gave Ken and his husband and co-owner of Message Glue. I gave him the facts about what I planned to do, and we build a story around that.
Yeah, exactly. It's taking your content. So through a conversation, Ken can ask you questions and get you talking about what it is that you want to say or what needs to get said. And then he'll craft that and turn it around in a structure that you can respond to. And then it becomes an iterative process. It goes back and forth until you both feel like it's really landing what you need to say. And go ahead.
And it goes way beyond just a set of PowerPoints.
Oh, it's,
Because, I mean...
No, come on. I mean, we all know PowerPoint serves a purpose, but it's not the end of the game. And I think people are starting to understand more and more that PowerPoint should be a tool to facilitate your message, not be your message.
And by the way, if you'd like to see the presentation, you can find it on our on YouTube. It's there.
Yes.
So you can Google it. It's, Google About Money and look for About Money has a number of YouTube things, but look for the presentation, the profit sharing presentation. And you can see what Ken and Anna have done. I would just, it's well worth looking at just to get an idea of what they do.
Thanks, Mike.
And it is pretty impressive. It's not just PowerPoint.
No.
The PowerPoints, or the presentation things fade away, they fall off. Anyway, you have to see it to understand.
It also has to be organic and true for the person who's presenting it. So it's not always the same. It's not a formula. So it can't be what you do with the Money Show and how you talk about your subject is unique to you. And that's also something that's really important for us and something I think that differentiates us. We're dealing with whoever our subject is. This is its own encapsulated moment for you. And so your slides, your conversation, the way you're talking about it should all reflect you and the brand that you are instead of trying to impose something else on anybody that doesn't fit.
So you get to the point, you have the story. Now it's the presentation. Yeah. And that's Anna's part.
Yes.
So tell us about that.
Well, and good segue I just made myself. Thanks for helping that, Mike. Is that it's every person is different. I mean, that goes without saying. I think we all think that's, of course. But a lot of times when we're talking about public speaking training or any kind of communication coaching or any, I don't know, the speaker classes you may have attended, they tend to approach things as a one size fits all, or here, if you do these things, you'll be successful. Well, it's great. It's a great way to maybe begin or get people to energize around certain ideas or things, but it doesn't necessarily address what is specifically unique to you, which you, Mike, will have things you want to work on in your public speaking and be to maximize your effectiveness that, Sarah wouldn't have, that person out there buying groceries from Wajimaya would have. It's all, everybody is completely unique, and how they share and talk about their subject is completely unique also. So their own perspective and their passion and their interest all is funneled out through their public speaking persona. And you want to be sure you bring all of those pieces together. And that's how you're the most interesting speaker, is if you're fully who you are.
And I think we've all been to a presentation where somebody has been coached.
Yeah.
My first radio program, by the way, I'd never been on the radio. I'd never listened to much talk radio. People around me told me I speak too slow. I pause too many times. I really need to talk really fast, and I really need not to pause. I really need,
Yeah.
And at the end of they made a CD of the program, and when I listened to it, I was devastated. I thought I sounded terrible.
Yeah.
Because it was not who I was.
Yes. Yeah, that's exactly the point. Because if you try to do those things, you would get away from all the things that make you interesting and all the things that you bring to a conversation about your subject matter. And that is the part that should be first. There's certain things, I think we've all listened on the radio. You hear people who maybe say, and if you hear it, then it becomes an issue. But that's how we talk. So if you try to get somebody to cut out, it's all of a sudden saying that first of all, it makes you incredibly self-conscious. And second of all, it's not how we speak. If it becomes an issue only if that's all you hear. And there's some people I can think of, it's just kind of all, it's like, wow, I didn't know what they were talking about, but boy, they say a lot. So that's an example of people trying to help. It's a helpful hint to maybe be aware if you're saying a lot, but don't fixate on it and don't try to cut it out, because it's not organic for a lot of the way people speak these days. And the radio voice, something that you made me think about was when I'm coaching people for public speaking and they're doing their presentations, you'll see many people who want to speak as if they're on the radio. So they're just talking and they don't want to let any air go by, and they want to keep that, dead air is horrible. Don't do it. Don't do it. But it isn't. That's not how we engage with each other anymore. It doesn't need to be that way, and certainly not in a live presentation. And I think you're a perfect example. That doesn't have to be that way for radio.
So we talked about radio.
Yeah.
But you also coach people on giving presentations.
Yeah.
So tell us about that.
Well, most of what I do is live. Any event you go to, the people standing up and presenting their subject, those people are my people, as I like to say. I work with a lot of tech industry, and I love it. I love working with people who perhaps aren't accustomed to standing up and needing to speak to people, not necessarily brand new public speakers, but people who are really in the detail of computer technology, and the subject matter tends to be a lot more dense, a lot more complex. Those folks, it's harder, I think, if I may paint a broad stroke, it's harder for them to communicate the bigger ideas to a group of people that aren't entirely doing just the same thing. So, and oftentimes we're being asked now more and more that they have to go speak to people, their customers, their other teams. They have to be able to communicate what it is that they're doing. And that's what I do a lot of.
It's very, very important.
Yeah, thank you. I think so.
No, it makes the difference between coming across as somebody that's sincere,
Mm-hmm.
even if people are sincere, and
Mm-hmm.
even if they've got a great story to tell.
Mm-hmm.
You go to presentations where people actually lose the crowd
Mm-hmm.
because they're trying to be something they're not.
Yeah.
And you tune out and are sitting there when everyone starts to get up and go because you've tuned out and you haven't been listening to the speaker in the first place.
Yeah. Yep, your mind just goes away because we all instinctually know when something doesn't ring true. It rings, you're sitting there watching and something feels awkward, or we feel a little worried for the person speaking, or we feel disconnected from their conversation. And most of the time that happens, you can check with yourself and think, well, I think that person is speaking outside of themselves. They're not actually just communicating with me. They're trying to either shove a bunch of information at me really fast so they can go sit down, or they're just trying to put on something that they may have seen somebody else do.
Yeah.
Yeah.
So how would somebody get a hold of you and Ken?
Well, they can go look up our website, which is www.messageglue.com. Or you can email either Ken or I, which is I'm Anna at messageglue.com or Ken at messageglue.com.
Okay.
Yeah, easy.
So if you're listening, you should do that. If you've got a story to tell, if you've got a public presentation to do, if you're going to be doing one of the workshops at the Money Show,
yeah,
you probably should hire somebody else because
there's plenty.
I don't need the
around.
competition. No. Anyway, it's well worthwhile. The presentation that they've helped and worked with me on, I think, is extraordinary. I hope that you, the listener, will come hear it because it will be June 15th and 16th. And you can also find it on YouTube because we recorded it. You don't get to see me live, but you get to hear the presentation. And it will be essentially the same one that's presented in Orlando and in Seattle. Anyway, we're coming to a commercial break. Don't go away because I want to return to Brexit. I want to talk about some of the changes that are going on in the world that are going to have a significant impact on companies and on investments. The times, they are a-changing. Stay with me. I'll be right back.
More about money coming up with Mike Adams on AM 1590, The Answer. For more information, click on adamsfinancialconcepts.com. About Money continues. Remember the website, adamsfinancialconcepts.com. Here's Mike.
So I began the program talking about Brexit. And Brexit raises concerns about the impact on the U.S. and globalization. From 1990 to 2010, that 20-year time period, commerce soared. The cost of shipping was falling, both by shipping on land, on trucking, on sea with ships, and by planes. The transportation costs were falling. Phone calls were becoming cheaper. Tariffs were being cut. Finance regulations were liberalized. And investments went international. Products were being shipped around the world, and investors and firms were treated equally regardless of nationality. But since the Great Recession, things have changed. You know, when you think about it, it was easy to ship smartphones from any country to any other country. It was easy to move products around. But the world is moving to a service-oriented economy. It's more difficult. Think about where we are in the U.S. Think about the biggest taxi company in the world. They own not a single taxi. Think about, and there's two companies. They own not a single taxi. Think about the biggest hotel company in the world. They own not one single hotel room, Airbnb. Think about the biggest media company in the world. They have no content. Facebook. We're living at a time of a sharing economy. I remember back in 1986 when I got into this business, I bought a computer. The computer had 100 megabytes of memory. I had 3 software programs. I had Word. I had a spreadsheet. I had a database. And I thought, I am set for the rest of my life. You know, software has been developed. Now it works. Everything is set, you know. Now I'm older and I'm wiser. You know, I understand that was not the end. 100 megabytes didn't last me very long. Those 3 software programs didn't last me very long. There was a lot of software that got added. I believe the same thing is happening with the sharing economy. We're entering a new phase where there's been disruptive technology or disruptive companies that have risen to the forefront. And with those changes, we're entering a time in which The Economist magazine calls slowbalization. Globalization has slowed down, and we're entering a new time, not just the sharing economy, but there's going to be a lot of different things happening. You know, I started a couple years ago with the new Trump administration concerned about trade wars. And reflecting back on the 1930s with Smoot-Hawley and the impact that had. You know, it's really not clear because if you look, the world's got a decent GDP growth, unemployment is low worldwide, profits are up, and in my opinion, what really supersedes everything is the super cycle. This whole thing, 1.2 billion people have emerged from poverty since 1990. 1.2 billion people. Instead of growing their own food and sewing their own clothes and subsisting, they're now buying smartphones, they're buying cars, they're buying lattes, they're buying store-bought clothes. The world has truly changed, and the rules of commerce are being rewritten. There's a growing trend, not just in the U.S., but worldwide, of a geopolitical rivalry that's gripping technology. 20% of the world's stock market is technology-driven, and we're starting to see a geopolitical rivalry take place. No longer are firms and investors being treated equally. It's really beginning to depend on who you are and where you're from. The rules on privacy and data and espionage are changing dramatically. And tax systems are being bent to political ends. There was a fairly free tax system worldwide in most countries. But think of the United States. When we passed the tax cut at the end of 2017, we made a special provision for companies to bring their cash back to the U.S. We're not the only country that's making tax rules to benefit the nationality. Cross-border investment, companies investing from their country into other countries, shrank last year by 20%. Even though the economies were growing worldwide, cross-border investment shrank by 20% and probably will continue to shrink this year. China, for example, cut their U.S. and European investment by 73% last year. Think about that. They cut their investment 73%. At the same time, they increased their investment in smaller countries. You know, I have a friend that's in the country of Georgia. He says Chinese money has just flowed in by the tons. There's a change going on. Regional trade deals are being done, you know, and we were involved in the Trans-Pacific Partnership, the TPP. You know, it was a multilateral deal which would have given the United States a significant impact and influence into the Pacific. We're out of it. We dropped out of that. The deal was done. China's not involved because of intellectual property, but we're seeing Asian countries sell to Asian countries. The supercycle is still intact. And I've talked about the supercycle any number of times, but the times are changing. The 1.2 billion people that have lifted out of poverty since 1990 are having a significant impact on the growth in emerging nations. And what we're going to see is something that's very different from the 1990 to 2010 globalization. We're going to see what the economist calls slowbalization. It's going to affect companies, it's going to affect investments, and it's going to affect individuals and their investments. Richard Foster of Yale did the original study that said that companies in the Standard & Poor's in 1920 had an average life of 70 years. Now it's 15 years. There are increasing numbers of studies showing the number of companies at risk of disruptive technology. Or, as InnoSight says, 50% of Standard & Poor's 500 companies are subject to creative destruction. That has an impact on index funds, because index funds buy the companies whether they're going to be destroyed or not. You know, it's a matter of picking the right place. And there's one more point that's important to take. And remember the dial-up internet? Now we're talking about moving to 5G, the fifth generation of the internet. What happens with all that? The way you get faster speeds and greater bandwidth is software. And guess who's competing to build 5G? China. And there's a huge amount of concern that that will give them access to all the data that's moving through the internet. They'll be able to download that, download it onto their own servers, and the phone call you make to your neighbor, the phone call you make to another business, if China develops 5G, will go into Chinese servers. Think about that. The world is changing. Privacy is changing. Nationalism is changing. There's a time and a place to be in the right stocks and the right investments. And it's going to become ever more crucial as we move forward. Anyway, that wraps up today. Have a great weekend. I will be back. Actually, next Saturday, I will be in Orlando. You can actually view me at about the same time as my program is playing, but I'll also be playing a program here. So do enjoy the week and listen to me in Orlando. Check us out. Until next week and the week after. Have a great week.
You've been listening to About Money with Mike Adams, a registered investment advisor. If you'd like more information about what you heard today, or about Mike's investment philosophy and strategy, or if you'd like Mike to evaluate your own portfolio, click on adamsfinancialconcepts.com. That's adamsfinancialconcepts.com. The information shared in the preceding program was for educational purposes only, and any investment advice given may not be suitable for all investors. Join us again next Saturday at noon for more About Money with Mike Adams, here on AM 1590. The Answer. The preceding program was sponsored by Adams Financial Concepts.